Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol and Associates Asset Management. Well, last week I observed that we may well be starting to find out about the influence of all that stimulus money and what it might do for the markets. And this week I am going to remove the may well and simply observe that we are indeed now finding out, as it now looks as if everything, and I mean everything, is headed higher. Well, what does this imply for the individual FANGs? Let's take a look at the SVA charts and dream, but only just a bit. There are three influences on any individual stock. There are the individual company dynamics, the group dynamics, such as, say, the oil and gas industry. And in our case today, I do tend to think of the FANGs as a group. And finally, there is the overall market influence. So let's see if we can sort them out for the FANGs. But before we take a close look at the charts, I do want to say thanks again to everyone who likes this video and all our subscribers. Well, let's start off with my favorite stock, Alphabet, and after that breakout and pullback over the MSG price, that's 5.5 times book value, this stock is clearly headed higher. And by the way, you can even see that the earnings forecast trend is moving nicely higher with you. It looks to me as if we've got a fairly easy count to about 2,700 for that stock. Facebook, almost the same story. We came down to the mid-super growth stock, mid-super growth price, and the stock has been rebounding. It is actually now, if I draw the line from the old top, it's now actually at a new high. And again, I think it heads to its bubble price as well. That's $370, so that's a decent gain from here. Whether it can do any more than that, I don't know. It's already hit and rebounded back down from there twice. I would be somewhat surprised if it'll go any higher this time around either. Nvidia, well, after our, remember, it had the setback and then it went right down to its HB3. That's 16 times its book value, had a perfect bounce there. And gosh, it's carried all the way in a very short time up to its HB4. Well, that was a quick gain of 28%. Well, what's it going to do here? Well, I've got to say, looking at the stock, it looks like it wants to go higher. And given the fact that the market looks as if it could still give us somewhere in the order of 18 to 20% from here, perhaps it will pull Nvidia through and higher. Now, if it does that, of course, then it's going to be at an all-time new valuation high. The HB4, or a little bit above, has been about it in the past. But you know, the industry dynamics are very, very strong, so it may pull the stock higher, and possibly, if you want to dream, as I said, as high as the HB5 or $809. Microsoft, hard to know what to say about Microsoft. The stock has been in what we call a kind of a sloppy trading pattern for some while. However, you know, if you look at the growth of the book value of the company, which of course is what all of these individual breakpoint lines tell you, it's been sweeping higher. Will it carry to its HB3 or $314? I don't know. Broadly speaking, I generally don't like sloppy trading, but for the time being, look at the market's going higher. We're going to stay with Microsoft. Now, Amazon, we had a sell on Amazon, and the stock didn't do anything for a long time, but now with the recent strength in the market, the stock is now pulled back to the HB3 price, again 16 times book value, and very much appears as if it wants to break out as well. Well, can it? Well, let's go and take a look at the history of Amazon. There we are. And, well, we can see, look, the stock has been as high not only as its HB4, which, well, that would be some 20 times book value, but it's actually been even higher than that in the long distant past way back in 2018. So, yes, the stock could pull higher, and if the market is going to be drawing the company with you, then I would very definitely now, I think I would be buying Amazon for what I hope is a good trade. Netflix kind of continues to almost sort of flounder. It really hasn't got any kind of head of steam behind it. It is lifting off from almost its HB3 bottom. Remember, we had a sell on the stock at its HB3 bottom, so it is kind of lifting off. But frankly, given its trading, I don't see that it's going to do any better than recover to its HB4. Still in all, that would be a gain of 16% from here. Finally, Apple. Unfortunately, it's difficult for us to get a solid reading on Apple until we have a new balance sheet. And we should be expecting one fairly soon when the company reports and, of course, releases its balance sheet. We'll be able to put it back in again. In the meantime, we had a sell on the stock as it cut through its HB5. Unfortunately, even though the stock is moving higher, from my point of view, I'm going to have to leave the sell in until I get some kind of solid SVA signal from our work. So in summary, first of all, my favorite FANG Alphabet has given us a clear buy by breaking through its MSG and had made a typical breakout pullback, a powerful confirmation of that signal. I expect that it is now moving towards its bubble price, that's 7.4 times book value. That would be a nice 17% gain from here, but we'll have to wait and see what happens at the bubble price. In the distant past, the stock has been much higher. Facebook is now streaming up towards its bubble price, 7.4 times book, and the stock's all-time high, last seen in August of 2020, and before that in July of 2018. That would be a gain of 20, and frankly, at this time, I cannot see any more than that. I said last week that I like these two stocks insofar as they are the two value stocks in an otherwise extremely valued sector, and I would cheerfully own both of them on this basis alone. And now, Nvidia. A bit of a poser, eh? I said several times that after the buy at the HB3, it should be able to carry to the HB4 price, that's 20 times book, but after that, things are less clear. Well, we're at my trading target already, and the stock looks as if it might burst out, although it hasn't given us a clear confirmation. The industry dynamics are there, however, and the next upside target would be 28% higher than today. I'm going to hold the stock, and I'm going to hold my breath at the same time. As far as Microsoft is concerned, it's been trading in what I refer to as a sloppy trading pattern. If it can go the next mile, we could see a 25% gain from current levels. I don't like these kinds of patterns, but with the market with me, I'd hold the stock. And now the laggards. The first is Amazon. Last week, I asked, is Amazon back in business again and about to break over its HB3 price? That's 16 times book. It's close, but we will still have to wait and see if we get a confirmation of a real breakout which carries to the next breakpoint. And if we do, of course, by the way, the upside measure would be 28% from here. Given its senior position among the FANGs, I could certainly see that that's possible. Netflix continues to be what I have called a reluctant participant in the current market rally. But it did fall virtually to support at its HB3, that 16 times book, and is now rallying from there. In a strong and positive market, the stock could reach back to its HB4, it's about 20 times book, which would add almost 16% to the current price. And that leaves me, of course, with Apple, and without a revised balance sheet, it's impossible to see what the effects of the recent buybacks have been on the structural prices which govern our own strategy. For now, without any kind of a signal, I'm not there. We expect a quarterly report from Apple very shortly, and then I can fill in the blanks. Now, what should we take away from last week? First, as they say, a rising tide lifts all boats, but how much of a rising tide is implied by our SVA metrics? Well, I should point out that if the Standard & Poor's 500 can tack on enough to take it to the next breakpoint, that would mean an upside target of roughly 5,000 for that index, or roughly 18 to 20% higher than today. I see a number of forecasters are thinking that a target of 4,500 for 2021 would be reasonable and not too fanciful. In response, I'm telling you that our SVA metrics are much more optimistic. Second, the FANGs are now market followers. They're not market leaders anymore. When I was looking at the upside potential for most of the FANGs, they're really not promising much more than the overall market. And it is the market which is pulling them higher, not the FANGs, which are leading the market. Third, of the 7 FANGs that we are tracking for this special video, I repeat that it is the 2 cheapest ones, Facebook and Google, or Alphabet, which would appear to offer the safest prospects for investors. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next Friday. Until then, please, everyone, stay safe. This pandemic is not over